Well, ladies and gentlemen, what on earth has been going on? China comes out with a nice little tariff on the US. Trade war has officially started. Now, who's next? Vietnam? I mean, I don't think the UK is going to do anything. And if the UK does decide to do something, well, that's me out of the UK. I'll be chipping and going somewhere else. The VIX. Now, I gave you guys a little bit of guidance on the idea that once the volatility index hits a certain extreme, then that would be deemed as a valid time to exercise the idea of a buy. Because the VIX says that when it's high, you buy. When it's low, you hold. Principally, you're shorting when it's low, because prices of assets would be appreciating and you are anticipating that the volatility index will start to climb up. Now, going into today's live stream, I'm going to break down the non-farm payrolls because everyone is asking the question, hold on, non-farm payrolls came in all good. Now, you know, that's bad news. As interest rate cuts ain't going to happen. No. The non-farm payrolls data has come in and shown that there are more jobs available, but that's only because people are effectively coming back from the strikes. So it's not a true representation of jobs. Now, throughout the week, we've had the JOLTS job openings report suggesting 7.59 million, a contraction in the jobs being made available for people. You had the ADP coming in at 155,000, more than what they had projected, giving the idea that maybe there is jobs. But the unemployment rate has gone up to 4.2% and average hourly earnings have stayed the same at 0.3%. To top that information, you've got them ISM manufacturing prices that have increased to 69. That's expansion in the prices. So what are manufacturers doing? They're charging more for their product. That product charge up is effectively going to get passed on to the retailer. The retailer, in principle, is going to pay for that, which means that there is an underlying chance of inflation going back up again. But the bets are coming in that the interest rates are going to get cut. The market is reacting quite severely to these tariffs. NASDAQ took a shoe bag to the downside, 3%. And that's just before the New York session. That's even before the non-farm payrolls. The non-farm payrolls data hasn't really given us that much volatility, but I truly believe that this market is manipulated and it doesn't make sense for market makers, options traders, to be going so crazy in positions for it to just continue to bleed to the downside. Is what I'm about to reveal going to give us the idea that maybe the bottom is in? And it's all on the back of the fact that the news is giving everyone the jitters and everyone is concerned. Because we've got to pay attention to the fact that we have now had nearly $7 trillion wiped off the stock market. At what point will someone think that there's a discount right now? Every single market crash has been successfully recovered. Is today a buying day? Let's break it all down, ladies and gentlemen. Bitcoin. China information, they've just priced in the tariffs. Vector candle recovery. Who knows? But there's a strong chance. The volatility index, ladies and gentlemen, has hit the infamous 30. Now, there's two readings to this. This is the CBOE, the Chicago Board of Trade Volatility Index. It is yet to be open, okay? But it is trading positive in the out-of-hours markets. So there we go. It's now at 36.56. The carry trade will unwind that happened on the 5th of August. When we actually look at the volatility index reading from then, okay, we, in principle, go back to it, and you can see that we hit a significant high of 35. And that's when the market started to turn back up. Would the logic hold true? That now is the point where Bitcoin could effectively make a recovery back up. How many of you are buying now? That's the question. How many of you are wanting to buy? Because it looks like it's a very tempting time to buy, given that Bitcoin hasn't actually dropped as aggressively as the NASDAQ. You see, the NASDAQ has taken a bit of a tumble to the downside, and it's been dropping most of the evening. Looking at the NASDAQ right now on the 15-minute time frame, you can see it's doing a nice little reversal, okay? The jobs data that came out, 228,000, that is great news. 4.2% on the unemployment. Hold on, you got more jobs, but the rate of unemployment is going up. Hold on, that doesn't make sense. I'll show you what does make sense. Sentiment. This is now adjusted. Yesterday, what was it? 86.78, whatever it was, favoring the idea of 4.25 to 4.5% on the interest rates. The current rate itself is around 4.31, okay, on the Fed overnight interest rate, okay? They're now betting that we are going to get the interest rate cuts. Why? Because investors are making the assumption that the tariff trade or the tariff situation is in principle going to impact the economy. Before the tariffs has come into play, we've already seen that the US economy itself is sort of doing okay, but there is a little bit of a contraction. ISM came in at 49. Listen, well, I'm not going to give you, right, for anybody that's new, I'm not the person that's going to say to you, draw this line, Bitcoin move. And then you are in your mind visualizing that the lines are going to magically make price move to the upside. I'm giving you logic and helping you understand the macros behind why anyone would go into the bonds, which is a $140 trillion marketplace. Why would anyone go into the stock market, which the NASDAQ is a $25 trillion marketplace? Why would anyone put money into there? Why would anyone get money from dollars and convert it into euros, given that the Forex market is around the 7 trillion daily turnover marketplace? And then everybody is relying on a couple of trend lines for Bitcoin to break out of, and that's a $2 trillion market cap. When you follow what the big money is doing, then you can add weight to the idea that your asset in crypto is going to appreciate. And I'll be frank with you, if it's not Bitcoin, it's nothing, because that's what's going on. It's all about Bitcoin. Any coin outside of Bitcoin is a meme coin, and that's the truth. Speaking of meme coins, Coinbase Derivatives eyes XRP futures rollout pending CFTC approval. So we're now waiting for a nice little pump on the good old XRP. So let's having a look at XRP right now. XRP is still in the XRP formation. And for those of you that are new, the XRP formation is quite a profound formation for XRP exclusively. And you don't really hear about it, or no one really talks about it, because it's something that is hidden in plain sight. And the XRP formation in principle is it doesn't fucking go anywhere. That's the basis of the actual formation. So there's no science to it. It just doesn't move. And the last time XRP broke out of the XRP formation was, if we just want to draw your attention to the 4-month time frame, we just look at that. And here is the actual breakout on XRP. So here is the XRP formation. You take the high over here. Where was it? Yeah, let's take this high, and it broke out of the formation quite majestically. And it's now back into that formation. So it's quite frustrating, as you know, a lot of you are probably finding with XRP. But please follow this phenomenon, that when it breaks out, it has to come straight back in, because XRP's price is magnetized to just stay in a boring range. Even when everyone's plowing money into it, it doesn't go nowhere. Ran over. Let's have a look at what's going on in cryptocurrency order flow. So, Bitcoin. The order flow right now is suggesting some interesting behavior. We've got quite a few offers coming into play. We do have Powell speaking later on, so that's something that we've got to take into consideration, okay? And that's going to be at 4:30 UK time, which is in roughly 2 hours and 20 minutes or so, okay? 10 minutes. And the idea is that if we just go and have a look at where people are prepared to offer, okay? The concept is this: when you start to see a lot of people offering price, that means they're preparing to sell the Bitcoin, okay? But we need good news to effectively start sending it up. The only good news that we can see is the fact that the Federal Reserve bet traders, swap traders, are expecting that the Fed is going to cut the interest rates. That means easing is going to come into play. That means money supply is going to keep moving. That means money is going to be cheaper. That means everything should appreciate, and we start the process all over again. Now, if we just quickly go over to the rate swap monitor, this is important. Euro, 3.47%. Like, guys, the rate on exchanging dollars to euro is itching close to what the rate is in the interest rates of the US. That's really grabbing people's attention. The yen, 7.61%. Do you understand what that is? That's doubled in the last week or so. It was at 4.25, whatever it was. Now it's at nearly 7.61%, nearly 8%. That is unbelievable rates of return. Going over into the Japanese yen, to put it into perspective, the yen is now pulling back from the news announcements as such. Sorry, here we go. Here we are. It's pulled back a little bit from the news announcements. The carry trade principle looks like it's still going to be on the phase of unwinding. But again, the yen itself, we need to wait and see what they have in store for the yen in May, because next month they're going to be declaring whether or not they are going to increase the interest rates, which will naturally force investors to get money out of dollars or the stock market and then go back into the yen. Looking at the way things are right now, there's a strong possibility that those traders have actually done that. It looks like they have unwind on the carry because the VIX itself has shot up to around the 30 and it's starting to pull back. The logic says when the VIX is high, you buy. Short-term day traders, you can exploit this, but you want to make sure that you're waiting for the open of the marketplace. Why? Because you've effectively got Tesla gapping down at the open, NVDA gapping down and getting close to our projection. It's so close to that $92 zone. This is going to grab a lot of people's attention. This stock, $92 a share. It's going to grab a lot of people's attention, okay? Amazon, big tech itself, it's down for another gap down. These are exhaustive gaps, and usually they're going to want to recover those gaps in the near future. MicroStrategy has gapped up. That's good news for MicroStrategy, okay? So that is in sentiment. Again, it looks like it's holding it out for crypto. The ETF story, let's have a look. No real movement right now. 15 hours ago, nothing's been going on the ETF itself. It looks like crypto's being held, but remember what I said, they're shorting Bitcoin and buying the ETF at the same time. Once you start seeing Bitcoin's price starting to mark higher, then that could effectively be short covering coming into play, and then that's when you're probably going to see the ETF start to take some profits where they'll start reducing the balance even though Bitcoin's price is going up. Because through all of the chaos that's happened in the marketplace, this balance right here has not gone down. It has gone up. They went from 548,000 on the ETF, and then they shot straight back up to the 571. Now they're at the peak at 576. So ETF balance is at all-time highs right now, and we're waiting to see if they're going to start adding more flavor because they are expecting that Bitcoin's value is going to increase in the future. Now, someone did speak about something saying that, and I want your, not your advice, but I'm not saying that I don't want your advice, but I want your insight into this in the comment section. I'm going to say it. Is Bitcoin a hedge or a store of value? Is it really a hedge or a store of value? That's the question I've got for you, because there are guys on the street suggesting that the real, true, safe haven asset is gold. And that is evident. That is so evident. You just need to look at Bitcoin correlated to gold. What is that? Like, really? That is clear as day that Bitcoin is a risk asset. That's the problem. And we need that idea to be killed. Because if you really want to see your Bitcoin climbing and climbing and climbing, the idea of gold going up, Bitcoin should be following, because people see it as a haven. They see it as a safe haven. But because cryptocurrency is so heavily manipulated, because so many people are trading it with leverage, okay? Look at the classification between gold and Bitcoin. Do they both have an ETF? Yep. Gold has an ETF. Bitcoin has an ETF. Can you trade gold on leverage? Yep. Can you trade Bitcoin on leverage? Yep. Does gold move as aggressively as Bitcoin? Nope. That's already one of the red flags that investors don't like. That's why they've brought in this idea of the ETF to maybe create the illusion that it's not going to be as volatile. But based on Bitcoin's price, you are going to see those swings. But isn't it a bit sad that Bitcoin's gone down and gold's gone up when only 2 months ago they were saying, buy Bitcoin, buy gold. Out of the two, you'd be break even. That's sad. That is really sad, in my opinion. Okay. So, oops, what's going on here? Okay, then. Any questions, ladies and gentlemen? Any questions before the market actually opens? Gold is 99% used for jewelry. How do you invest in this crap? Bitcoin is definitely the more complete asset. Well, if you're investing in gold and you think by investing in it is going to buy jewelry, you're not investing in gold, my friend. You don't buy jewelry when you invest in gold. That's not what you do. You're buying bars, you're buying bullion, okay? And that's where you really see the benefit of buying gold. Buying a gold chain does nothing for you, you know? And you're buying retail prices, you're paying retail prices, the markup on there, you're already losing at the amount of money that you're spending on it, unless it's a gift. You need to be getting bullion, you know, full sovereign coins. That's where the gold's at, you know? Paul is speaking today. You can't compare a 17 trillion asset to a 1.5 trillion asset. Tell me why I can't, because that's what everyone's doing. Tell me why I can't compare it. Remember, this is the asset that everyone thinks. Like Bitcoin, okay, is $83,000. I mean, today we've got options expiry and the max pain is 84,000. Okay, but it's not that much expiry. The options expiry itself is not that much. It says here about approximately 26,000 Bitcoin options with a notional value of 2.02 billion expired according to the data. And it says that the actual max pain price is 84,000. And max pain effectively means that it's the amount that people will deal with the worst amount of loss. Okay, that's what the max pain is. Well, right now we're at 82,997. Okay. Only a few moments ago, well, not so long ago, we were at the 84,000 region itself, okay? If the NASDAQ itself can sustain itself and keep on climbing up, then we are in a good run for the day, okay? But because it is Friday today and the market's a little bit smacked and the markets will be opening in the next 10 minutes, okay? We got to wait for that initial reaction, which is where the Brinks box is now being created, okay? Do you put any weight on the long-short ratio? Sometimes I do, sometimes I don't. I really look at it like this. Where is risk right now? Risk is off, okay? And whenever it's in these extremes, okay? The last extreme was when we had the Japanese yen interest rate increase, and that was in August. Look at the risk there. It slumped, right? It slumped. Risk came off. It came straight back up. Look where we are here. That is wild. There is a strong possibility that we could actually see this giving us the idea of investors stepping back in. Just looking at the calendar itself. Look, not calendar, but look. See, we're inside this range and it's done a sharp drop. Equally with a sharp drop, it's going to lead to a sharp reversal. Going into the dashboard to have a look at smart money, dumb money. Smart money has been aggressively buying, okay? Look at that. The last time it hit such a peak right there, I mean, it actually hasn't. Let's just have a look at it. Hold on. There we are in that peak right there at 0.8, okay, by smart money, right? So 0.8, the last time they hit that, well, the highest reading was 0.81, okay? And that was in 2022 when they were buying, and that was the market top, okay? And they were buying aggressively, and then assets started to come down a little bit, and then they started to mark up ever so slightly. It was a small little rally. But now we're back into that same zone again, which suggests that smart money has been buying on the drop to the downside, okay? And as we're going into a change in the way fiscal and monetary policy is going to be playing out, and we've given that the volatility index has come in higher, and the actual Chicago Board of Trade is going to be gapping up at the open, 37, the logic says that when it's high, you buy. And you know what? I've got the balls to turn around and say to you all that when it's high, you buy, and you're exercising that logic. Take the fucking trade, because you're not going to know. Understand your risk parameters. Don't just, and if you take the trade and it doesn't go up, and then you come back and say, you said buy. Well, you know what? Tough shit. That's the name of the game. If you're in this game to try and make money and you think it's going to be easy to make money, you've got to make decisions. You've got to take the risk. This ain't no free lunch, man. It's the hardest, easiest way to make money. And if you don't align yourself with that truth, you're going to get smacked. You're going to provide liquidity to the person that understands that logic. If you can't handle that and you need to seek the safest way to make money, where is the safest way to make money? The safest? Okay, you can go out and work where you exchange your time for money. That's fine. But people come to the game of trading to speculate. And if you're making money in the game and you make a decent return, in 5 minutes, you can make $1,000. But then greed comes in. Well, if you earn $1,000 in your day job in 5 minutes, then you have every reason to hold on to the trade, because it's money that you're not thinking it doesn't matter because I already earned $1,000 every 5 minutes. But if you're making $1,000 in a trade in 5 minutes and you're not paying yourself from it, you do not deserve to see the benefit of this game. You don't, because you're not paying yourself. You're not taking that money. And that's the problem that a lot of people have in this game. They see a little bit of cash and they want more. That's the problem with it. Pay yourselves, pay yourselves, pay yourselves. No one went broke taking a profit. Damn. Frustrates me at best of times. Anyways. Every time my guy says... Every time he says Bitcoin is Wall Street's female dog, my guy loses likes. Too real for... All right, I get it. Okay, yeah. Look, it's the truth, okay? It's the truth. I'm sorry. You don't like the idea that Bitcoin is Wall Street's female dog? I don't even know why I'm saying that, but anyways. If you don't like the idea of that, well, accept it, because you're all banging on about the ETF. You wanted the ETF. You want it. Yeah, please, please, please. Okay? You got your ETF pump. Now what? Now you've just reduced the supply of Bitcoin. You've made it less accessible for you to get access to it. And you got two heavyweights, Sailor and BlackRock. Combined, they picked up 1 million Bitcoin. All right? It's going to be an interesting story. You know? How does the hybrid method compare to smart money concepts for scalping and swing trading, in your opinion? The hybrid system is a very discretionary trading system. It's not, we look at the vector candles, okay? And you say, okay, then is Bitcoin going to come back up to this vector candle? More than likely. Why? Because there's logic behind this. There's order filling, there's money, there's psychology, there's fear, there's greed, there's hope, there's anxiety, there's all of it. All inside of a candlestick, okay? We trade people's feelings. We trade people's perceptions of value. That is what the hybrid system is. When you see Bitcoin taking a nosedive to the downside, look at this. You got W formation. Structurally, you look at it and you'll be like, yeah, okay, W formation. I'm now going to go back in the charts and try and find as many W's as I can so that I can train my mind to associate the development of how this pattern can work. Then when you've gone back in the charts and trained your mind to have an association with the variations of this pattern, when it comes to you doing it in real time, you'll have a bit of a history in your mind because you've trained your eyes to register what you need to see developing inside of this pattern. It's not there's a W formation. If it was that simple, we'd just sit there waiting for W's and M's. Unless you trade in the NASDAQ, that's a different story. It's about your association with when you're practicing familiarity. How can I put it to you? If you can familiarize yourself, all right, I can't even say it. You can become familiar with this structure of this pattern. Go back and tell me you have witnessed as many patterns as possible that could form, because they're not always going to be a nice, clean W formation. They're not always going to be as choppy. Some of them are going to be dropped, and then some are going to have vector candles right here. You don't always get the cleanest pattern. But when you've trained your mind to be like, okay, you know what? I can relate. The last time I seen this pattern develop, okay, it did this. So then you take the stab. You look at the environment and say to yourself, look, it's all there. If you are new completely, just go and take this course. It's in there. I break it all down for you in the patterns. Go to the pattern section, all right? There's a criteria. When to buy and when to effectively sell when you're actually trading with this pattern. It gives you the entry points. So let me just show you. Here we go. Where is it? There you are. We're right here. Wait there. I'll find it for you now. So you guys, there you go. Look at that. So rules: aggressive move lower. Price must reverse towards a moving average. The second move lower must be within the previous low. Expect to move away. Okay. This is the rules for the pattern. So now you've got that information. Then you go back to the charts and go and find yourself as many W's as you can and correlate that to that. Once you've done the repetition of finding variations of the pattern itself, then you're going to say to yourself, okay, let me put some money to it. Okay? Let me put some money and test that logic. I started doing it on the 1 minute time frame for Euro and for the USD JPY on the 1 minute time frame with data from 1970. And I went back and I worked on the 1 minute time frame. I did the 5 minute time frame for both. I did the 15-minute time frame, the 30-minute, the 1 hour, the 4 hour, and the daily. Okay. I've done a lot of W formations and M formations. All right. This course breaks it down for you to help you understand how to exploit it. Okay. And it's free. And if you want to apply it in your everyday, you become a platinum member. The platinum member, we go deep dive into the hybrid. We're taking trades. We're looking out for opportunities, and everyone is pretty technical in that Discord. So you want to increase the speed of your learning. You become a platinum member. You get involved in that. You get all these checklists that break down the various strategies of the hybrid system. But the one key aspect of the hybrid system is the practice. Because if you can't premeditate what something's going to do in the future without recognizing its structure, without recognizing its behavior first, because I can promise you, ladies and gentlemen, you are going to see another W formation in Bitcoin. You're going to see it happen in Ethereum. Look at this for a W formation. All right. That looks like a very small W formation. That there is a V-shaped reversal. You want to learn about the V-shape? Just look at the PDF and look at checklist part 3 that you get access to with Platinum membership. There it is. It's all there for you. Train your eyes to understand what to look for. It's all in there. Now go back in the charts. Find yourself V-shaped reversals. Here you go. Red candle, green candle formation. There's a strategy for that. Where is it? Here we go. There you go. Red candle, green candle formation. That's a strategy. There are so many aspects to the hybrid system that are going to be suited for day traders, swing traders, you name it. You're a discretionary trader. You are trading reactions. You are trading belief. You are trading desires. Okay? We take the idea of smart money concepts and say, okay, maybe they could be buying. We know they're buying when it drops because look at these orders here. They're all stacked. People buy as prices drop because that's what you do. You buy when the value of the appreciation of the appreciating asset is going down with the expectation of it going up in the future. That's why they buy at these lows and then they sell at these highs. That's the logic, ladies and gentlemen. And the market ain't even open yet. Yeah? Are we good with that? Tina, when you're trading, do you always have an eye on the VIX before entering a position? Yes and no. Because when I'm trading, I'm looking for that. You make reference to the volatility index, okay? As a means to understand the following, right? Here we go. So I look at the VIX right now, right? The current trading situation. The VIX is going up. All right, we're getting close to the market open. It's 3 minutes and we've got a green vector candle. I look at it and I say to myself, what's been going on? Investors are concerned. Okay, they've been hedging themselves. That means once the hedge has been achieved, what's actually happened? I know that prices of assets have dropped to the downside. So I know that in terms of options, there are market makers that are filling orders against previous players' expectations of lower prices, and they're buying up those orders. At the same time, assets in other places as well, like, for example, let's look at the dollar. A lot of guys right now are sat with dollars and they're like, okay, what am I going to do? Do I want to buy dollars right now with my appreciating asset like euro? If I have an expectation that the dollar is going to be expanding in the future because of these tariffs, I might be able to buy a bag load of dollars right now with an appreciation of 1.86, but I can get loads more on the back of a strong euro. Okay, so I'll exchange my euros because I know they're offering me decent rates to do that. Okay, I can exchange my dollars into euros or exchange my euros into dollars because I think the future is going to be bright for the dollar. There's always continuous changes of perception of value. And when you apply that into your trading and trading the hybrid system, when you look at this, you see that is value right there. Someone had an expectation that they didn't like the outcome of something. They got rid of their asset and they hedged themselves elsewhere. Is the hedge fully fledged? Has it been done? Well, we'll know once the market opens. Everything is tipped to gap down. The NASDAQ itself is trying to work its way back up again. Stock market has been buying. Remember, they can only really buy if someone is selling. Sorry, they can only sell if someone's really buying. Yes, $7 trillion worth of market value has been wiped off. But has it really gone anywhere? Someone's paid for prices at these discounts. Someone's bought something because your market would be broken. Market maker's job is to facilitate the transaction between buyer and seller and maybe charge a little bit of spread and exploit that. So realistically, has the market really wiped out that much? If there is a buyer for every seller and if there's a seller for every buyer, money's just moving. That's all it's doing, you know? Are we good to buy according to the VIX is up? Listen, if you decide to buy, ladies and gentlemen, you run the risk that things could actually change. You know, you've got to say to yourself, yeah, you know what? I'm going to take the ballsy move and buy now. What are you going to do? You're going to buy all in 500x leverage? No, don't be irresponsible like that. You will last 5 whole minutes in this market. You will, when you're using that much leverage. 5 minutes. I'd say 4.5. I'm being really nice there. You know, what's your ideal TP stop loss ratio? 2 to 1.15. Okay, 2. You know what? I don't aim for high risk reward. I don't aim for like your 5 to 1, 6 to 1. Statistically, it doesn't make sense to aim for those because you do run the risk to ruin you do get a risk to ruin opportunity pretty quick. And what I mean by risk to ruin is if I'm risking certain amount to make 6 to 1, okay, in terms of an edge, it's not consistent. You're always going to end up getting caught out. All right. That's why the sweet spot is 1 for 1, 2 to 1. Okay. But not everyone has the same perception of value. Not everyone has the same logic of risk. Some of you might think, yeah, baby, I'll spend $500 on that dress or on that shoes or on that coat. Okay. But then when you come to the charts and you're risking the same amount of money, you then wet the bed and you get all upset because you lost $500. Oh, I can't afford to lose all of that. No. You've got to say to yourself, the best way for me to explain to you the safest option for risk is if you can open a trade and completely walk away and not even care about it and say, I'm not even going to look at this for the next 2 days. I don't care where it goes up or down, because even if it were to crash, I'd probably lose only 10% of my account. That for me is the most optimal risk reward rate, risk strategy, where you can accidentally take a trade and it doesn't affect you, which means that when you do sit and concentrate and do take a trade, okay, you can manage your expectations. You know what money you are prepared to lose. Forget about what you can make. Forget about it. Don't focus on what you can make. Focus on what you can lose. A gambler will tell you what he can win, but a trader will tell you what he can lose. And I'll put my money with the trader, because if the trader says to me, I can lose $50 on this trade, okay, I'll be like, okay, I might take my chances with you because you're aware already what you could lose, because he has no idea of how much the reward is going to be. No one knows what the risk to reward is. You can't say to me today, I'm going to go for a 10 to 1. You end up getting a 10 to 1, happy days. Can you do it consistently every single day? It's not something that happens all the time. Now, 1 to 1 or 2 to 1 is easily achievable. You just got to try and capture the right time for momentum. But when you're going for 3, 5, 6, 7, what is that? Why are you going for such wide swings? And consider the drawdown to achieve that. That's like a gambler saying to you, I made $500 in the casino last night. And he keeps banging on about it. And then you go to him and say, yeah, but how much did you lose, bro? And you'll be like, 10 grand. How does that make sense? Any other questions? Any other questions? Options data coming in right now. Tino, good time to start the 2020-24 year. Starting here could be really, really good. Potentially, but you do run the risk of potential sweep to the downside with Bitcoin. Might be something that happens. Market is now responding to this information. Okay, so the market is now open. I just wanted to stay just a little bit for the market open in principle. So here we go. The CBOE, there it is. Big gap up, 37.14. Just sit tight. You've got Powell speaking in a bit, but it is gapping up. So the sentiment could still be to favor lower prices. NASDAQ is starting to pull back down again. And to be honest with you, non-farm payrolls information that's come out has done nothing to the market. It's quite bad, actually. This is unbelievable for the NASDAQ, okay? Which could mean that today could be a boring day because they've already made the moves, you know? But the fact that non-farm payroll hasn't really done anything to NASDAQ, it's not even done anything to the dollar. Let's have a look at the dollar for a second. Or gold, like gold. I mean, gold's just going down anyway. But going into the dollar, yeah, it's not really done too much. It's not really done anything. And Bitcoin hasn't even moved either, you know? So one of them ones. ETH 4-hour time frame, big W. Can you check, Tino? What would validate this to be the low on the 4-hour time frame for the bull run as in new all-time high? I mean, listen, you want to be careful looking for Ethereum all-time high. All right? You really do want to be careful with it. Why? Because look how far away it is from its all-time high. Okay? That is just despicable. A little 4-hour W formation. I understand what you're saying, but this would be a W formation on the premise that it actually holds. Okay? And if you went back and looked at the variations of a W formation, you'll kind of know that there is a possibility that this W formation is more than likely not going to succeed. Okay. And the only reason I say that is because when we look left and we look at where price is, the actual logic of price to reverse would have to be done once this is all completed. So that takes us to 1635. Now, given the tariffs and all of this stuff, okay, cryptocurrency has done very, very well to sustain itself and hold within these ranges, okay? Doesn't mean that it's not subject to it. It just means that people are weighing up the options on what could be happening with the tariffs. And China's come out with a tariff story, which could get investors a little bit concerned about things. And then cryptocurrency later on sells off, okay? So as much as you look at the chart structurally and say, yes, it looks like it's getting ready to try and break out, the only true validation of that would be if they did and broke away from this 4-hour red vector candle and price comes away from this, retraces into it to continue to the upside. Okay? That's my logic right there. Yeah, if you're looking at all-time highs now, it's just that you're better off projecting Bitcoin to 15 million. You know, it's just not now. You only want to consider all-time highs with Bitcoin, okay? When Bitcoin on the daily time frame, oh wow. I would only consider all-time highs on Bitcoin if we can get out of this cluster. That means we get above the 50 EMA on the daily time frame, we trade around it, consolidate, and then get ready to break out. Do you see that? No. Macroeconomically speaking, do we have that? Not yet. The volatility index says that when it's high, you buy. So you could get to take advantage of some volatility, and Bitcoin moves up and does one little candle, and that actually only manages to come back up into this red vector candle region right here. And then everyone will be like, yeah, baby, Bitcoin to the moon because the candlestick moved up. It moved up towards 86,000. And everyone says, like, that's it. The bull run is back on. So if it takes one candlestick for someone to believe a bull run is on, I don't know. I don't know what else to say. Anyways, other than that, Tina, when I look at the VIX, when Japan raised the interest rates, it didn't shoot up as high as the last one last year. How do we know when to buy with the VIX? The VIX with the hybrid system, it shows you the vector candles, okay? Now, you can see that the VIX is up and you've got these vectors, okay? I expect them to come down. I do. Because this represents hedging. It represents options. It represents sentiment. And they can only keep that exposure in there for a certain period of time. So the hedge has actually happened. The hedgeable event has happened. So we are effectively, look, they've come back into that vector candle region that we've been looking at for ages. I've been giving you guys that heads up, okay? It's been there. Now that they've come back into that, you're looking for this. You're looking for the next candle to effectively start giving us the idea that everything's coming down and they've hedged themselves and they're getting ready for the next hedge. I'd say at the start of, I'd say once the new candle starts, a new week starts, that's when we're going to know. Because this isn't finished yet. We don't know if this is the truth of the move yet. I'd say on Monday, you'll have a great idea as to whether now is the time to buy, in my opinion. And not too much either. Split your purchases up. Factor in the possibility that there is another event in line with the tariffs. Okay? Wrong VIX. I know it's the wrong VIX. It's this one here. 38.67. So we're coming into extremes. It's already hit the extreme and pulled back. All right? So just take that into consideration. All right? Cool. I know it's the wrong VIX. I know it's this one here. You're just happy to see me. What a guy. Anyways, listen, ladies and gentlemen, mad love and respect. Be sure to like and subscribe. If you want more information on the hybrid, check it out. It's in the description of this live stream. And I'll be tuning into you all on Monday unless something wild happens. All right? Adios, mother.